Does your heart pound when you think about checking your credit score? We know it's important, but does looking at your score actually tank it? Today, we're exposing the truth behind this giant credit score myth. So, does checking your own credit score lower it? The loud and clear answer is a massive no. When you check your own score, it's a soft inquiry, like looking in a mirror, no damage done. Regularly checking is smart. You can catch errors, spot potential ID theft, and stay informed. That fear, it's gone. What's a soft inquiry? It's when you check your credit, or a company you've authorized takes a look, but not because you're applying for new credit. Examples include you checking your own score, pre-approved credit card offers, background checks you've approved, or your bank doing a routine account review. Soft inquiries do not hurt your credit score. Lenders for new credit don't see them, and they have zero impact on your score. Now, let's talk hard inquiries. These happen when a lender checks your credit because you've applied for new credit, like a credit card, mortgage, or car loan. Hard inquiries can cause a small, temporary dip in your score, often just a few points. They stay on your report for about 2 years, but their impact on your score usually lessens or disappears within the first year. Why can hard inquiries affect your score? Applying for a lot of credit at once can look risky to lenders, but scoring systems are smart. If you're shopping for a specific loan, like a mortgage or car loan, and apply with multiple lenders in a short period, usually 45 days, these are often treated as a single inquiry. This lets you shop for the best rates without unfairly hurting your score. Quick recap. Soft inquiries? That's you checking your score or pre-approved offers. They are safe and will not lower your credit score. Hard inquiries? These are for new credit applications and can cause a small temporary dip. So, be strategic when applying for new credit. Since checking your own score is safe, how often should you do it? Experts recommend checking your credit reports from Equifax, Experian, and TransUnion at least annually. You can get these free weekly at annualcreditreport.com. Many banks also offer free monthly score updates. Check more often if you're making a big purchase, working on your credit, or suspect identity theft. Regular checks help you know where you stand and spot issues. The takeaway? Don't let fear stop you from checking your credit score. Looking at it yourself won't make it drop. That myth is busted. Knowing your score empowers you. Soft inquiries are fine. Be mindful of hard inquiries. What other credit myths have you heard? Drop them in the comments. If this helped, hit that like button. Thanks for watching.